Hello everyone, welcome to the March 6th Friday edition of the Market Opening Bell, your 10-minute guide to the stock market. Investors are hopeful there may be a glimmer of light in the Middle East geopolitical situation, and the three major US stock indexes rebounded overnight. The fourth session of the 14th National People's Congress opened yesterday morning, with Premier Li Qiang delivering the government work report. After 3 straight days of declines, Hong Kong stocks staged a recovery. The Hang Seng Index opened 334 points higher, rose as much as 487 points to an intraday high of 25,736, then swung back in the afternoon to briefly fall 12 points to a low of 25,236. It closed the day up 71 points or 0.3% at 25,321. The Hang Seng China Enterprises Index fell 32 points or 0.4% to close at 8,451, while the Hang Seng Tech Index dropped 33 points or 0.7% to 4,796. Total market turnover reached 321.8 billion Hong Kong dollars. Southbound trading volume totaled $150.5 billion, but southbound funds recorded a net outflow of $27.735 billion, the highest since August 15, 2025, when the net outflow was $35.876 billion. The previous trading day has seen a net inflow of $466 million. Among the flows, southbound funds net bought Tencent for $1.541 billion and CNOOC for $321 million, while they net sold the Tracker Fund for $13.66 billion, the Hang Seng China Enterprises Index ETF for $6.073 billion, the CSOP Hang Seng Tech Index ETF for $3.9 billion, and Alibaba for $2.028 billion. Statistics show that southbound money has now net bought Tencent for 5 consecutive days, totaling $6.963 billion, while it has net sold Alibaba for 4 straight days, totaling $8.085 billion. On the mainland, the 3 major A-share indexes rose in the morning before narrowing their gains in the afternoon. The Shanghai Composite climbed back above 4,100, up 26 points or 0.6% to close at 4,108. The Shenzhen Component Index gained 171 points or 1.2% to 14,088, and the Chinex Index rose 52 points or 1.7% to 3,216. Combined turnover on the Shanghai and Shenzhen markets reached 2.39 trillion yuan. The renminbi central parity rate against the US dollar was raised by 117 pips to 6.9007 per dollar. In the government work report and the draft outline of the 15th five-year plan released by Premier Li Qiang, China set its full-year economic growth target at 4.5 to 5%, below last year's 5% target, but in line with market expectations. The fiscal deficit is planned at around 4% of GDP, with a deficit size of 5.89 trillion yuan, an increase of 230 billion yuan from the previous year. General public budget expenditure will reach 30 trillion yuan for the first time, up about 1.27 trillion yuan year on year, signaling stronger fiscal expansion to support economic stability. The government will also use borrowing to prevent further cooling, planning to issue 1.3 trillion yuan in ultra-long special treasury bonds to support the 2 major and 2 new initiatives, plus an additional 250 billion yuan in ultra-long special bonds to promote consumer goods trade-in programs and optimize policy implementation. A 100 billion yuan fiscal financial coordination fund will be established to expand domestic demand through interest subsidies, financing guarantees, and risk compensation. The inflation target remains unchanged at 2%. The 15th five-year plan sets 20 major indicators with the goal of doubling per capita GDP by 2035 compared with 2020. Power equipment stocks were in favor. Harbin Electric and Dongfang Electric surged 10% and 17.6% respectively. Analysts noted that power shortages in Europe and the United States, combined with the overseas expansion of domestically produced computing power tokens, have opened a major investment cycle in the power sector, benefiting equipment makers. Europe and America's aging grid infrastructure, coupled with frequent blizzard warnings causing rising blackout risks, is elevating systemic concerns. Meanwhile, the AI computing power boom has widened the U.S. power supply gap and sharply increased demand. U.S. grid investment is entering an epic expansion cycle. The three major regional operators, Texas, Mid-Atlantic, and Midwest, have recently been approved for a total of $75 billion in projects focused on 765 kilovolt ultra-high voltage lines, the largest power line expansion in U.S. history. The White House has also reached agreements with tech giants such as Google, under which data center power infrastructure costs will be borne by the tech companies themselves so as not to raise ordinary users' electricity bills, removing any funding concerns. JD.com released its full year and fourth quarter 2025 results. Although full year revenue maintained double-digit growth, heavy strategic investment in new businesses, especially JD Takeaway, led to a sharp decline in group profit. Net profit fell 52.7% year-on-year to 19.6 billion yuan, while adjusted profit dropped 43.5% to 27 billion yuan. A final dividend of $0.5 per ordinary share was declared. Revenue reached 1.3091 trillion yuan, up 13% year-on-year. Adjusted EBITDA was 18.3 billion yuan, down 64.7%. In the fourth quarter alone, profit plunged 73% to 2.7 billion yuan, and adjusted profit fell 90.3% to 1.1 billion yuan. Revenue rose 1.5% to 352.3 billion yuan, with adjusted EBITDA showing an 80 million yuan loss. JD Retail's fourth quarter operating profit was 9.8 billion yuan, down 2% with an operating margin of 3.2%, slightly lower by 0.1 percentage point. New businesses including JD Takeaway, JD Property, Jingxi, and overseas operations widened their fourth quarter operating loss to 14.8 billion yuan, compared with a loss of only 890 million yuan a year earlier. The full year operating loss for new businesses totaled 46.6 billion yuan. JD Takeaway, launched just 1 year ago, has already attracted over 240 million users and captured more than 15% market share. Qixien Xiaochu stores have basically covered the area inside Beijing's Fifth Ring Road, with new outlets opening in Shanghai, Shenzhen, Guangzhou, Tianjin, Harbin, and other cities. Full coverage of all first and second tier cities is targeted by the end of 2026. As expansion accelerates, JD Takeaway's market share is expected to rise further, and the group aims for 30% by 2026. JD Health announced its annual results for the year ended December 31st, 2025, with both revenue and profit hitting record highs. Revenue reached 73.441 billion yuan, up 26.3% year-on-year, marking 4 consecutive quarters of over 20% growth. Gross profit rose 36.7% to 18.199 billion yuan, and net profit increased 29.1% to 5.367 billion yuan. On a non-IFRS basis, profit grew 36.3% to 6.533 billion yuan, with a net margin of 8.9%, the highest since the company's founding. Annual active users reached 217 million. JD Logistics reported full-year results showing steady revenue growth but short-term margin pressure. Turnover rose 18.8% to 217.1 billion yuan. Net profit increased 7.2% to 6.647 billion yuan, or 1.06 yuan per share. No dividend was paid. Fourth quarter revenue grew 21.9% to 63.5 billion yuan, and net profit rose 17.8% to 2.037 billion yuan. Non-IFRS net profit climbed 30.7% to 2.405 billion yuan, while the non-IFRS margin slipped 0.6 percentage point to 3.7%. Bilibili, commonly known as B Station, released its full-year results and officially announced it had turned profitable for the year, marking entry into the scaled profit stage. Full-year net revenue rose 13.1% to 30.348 billion yuan. Gross profit increased 26.7% to 11.114 billion yuan, and the gross margin improved 3.9 percentage points to 36.6%. The company swung to a net profit of 1.194 billion yuan from a loss of 1.347 billion yuan the previous year, with earnings per share of 2.85 yuan. On a non-GAAP basis, it also turned profitable with 2.59 billion yuan in profits versus an adjusted loss of 22.104 million yuan previously. Adjusted earnings per share reached 6.18 yuan, and the adjusted net margin was 8.5% versus an adjusted net loss margin of 0.1%. No dividend was declared. In the fourth quarter alone, net revenue grew 7.6% to 8.321 billion yuan. Gross profit rose 10.5% to 3.081 billion yuan, and net profit surged 4.7 times to 513 million yuan, or 1.23 yuan per share. Average daily active users reached 113 million, up 10% year-on-year. Monthly active users hit 366 million, up 8%. Average daily time spent per active user rose 8% to 107 minutes. Technical analysis, the Hang Seng Index hit a high of 25,736 yesterday, filling Wednesday's downward gap between 25,727 and 25,470, but closed back at 25,321, forming a rather long upper shadow on the daily candlestick. This indicates that yesterday's rebound was merely technical. After filling the gap, there is a high probability of another test of the 25,000 level. After Iran claimed to have attacked an oil tanker, market worries about an Iran war intensified again. New York crude oil futures briefly broke above $80 per barrel, and US stocks came under heavy selling. The VIX fear gauge rose 2.6 points, or 12.3% to 23.75. The Dow Jones Industrial Average fell as much as 1,162 points, or 2.4% at one stage, before closing down 784 points, or 1.6% at 47,954. The Nasdaq fell a milder 58 points, or 0.3%, to 22,748, while the S&P 500 lost 38 points, or 0.6%, to 6,830. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, dropped 100 points, or 1.4%, to close at 6,913. Traditional stocks were under pressure, with Boeing down 2.3% and Caterpillar falling 3.5%. Bank stocks JP Morgan Chase and Morgan Stanley declined 2 to 3%. The United States is tightening export controls on AI chips, requiring government approval for NVIDIA and others to ship globally. NVIDIA still closed slightly higher by 0.2%, while Micron and AMD each fell about 1%. Other tech stocks were mixed. Apple and Meta fell around 1%. Microsoft rose 1.4% against the trend, and Amazon gained 1%. Broadcom reported first quarter profit up nearly 34% year-on-year to $7.35 billion with adjusted earnings per share of $2.05, slightly beating the expected $2.03. CEO Hock Tan said AI chips developed in cooperation with OpenAI are expected to begin shipping next year. The company also plans to deliver chips to Anthropic, which uses Google TPU to reach 1 gigawatt of capacity this year and exceed 3 gigawatts next year. AI chip sales are forecast to surpass $100 billion next year. Hock Tan added that discussions with another major client, Meta, are progressing smoothly, directly refuting reports that Meta might abandon the custom accelerator project. The roadmap remains on track and products are already shipping. Chipmaker Marvell Technology announced fourth quarter earnings per share of $0.8 and revenue of $2.22 billion, both slightly above analyst expectations of $0.79 and $2.21 billion. The company guided first quarter earnings per share at $0.79 plus or minus 5%, above the consensus $0.74, and revenue at $2.4 billion, plus or minus 5%, beating the market forecast of $2.28 billion. U.S. initial jobless claims for the week ended February 28, after seasonal adjustment, had held steady at 213,000, slightly below the forecast of 215,000. Non-farm business sector labor productivity grew 2.8% in the fourth quarter of 2025, a slowdown from the previous quarter's 5.2%, but still exceeding market expectation of 1.9%. Unit labor costs in the non-farm business sector rose 2.8%, above the expected 2% and reversing the third quarter's 1.8% decline. According to the Challenger Gray and Christmas report, U.S. employers announced 48,307 layoffs in February, a 55% drop from January's 108,435 and a 72% decline from 172,017 in the same month last year. However, with the United States increasingly drawn into the expanding conflict with Iran, more layoff plans could emerge by the end of the first quarter as companies tighten spending amid uncertainty and higher costs. Our stock pick today is Shanghai Electric, stock code 2727. Shanghai Electric actively seizes opportunities arising from the national energy policy to serve the construction of a new type power system. In the nuclear power field, the group has mastered the manufacturing and inspection testing technologies for key nuclear power equipment. In the first half of last year, it secured contracts for 8 nuclear island main equipment units, successfully produced 9 nuclear island main equipment units and 1 conventional island equipment set, and has cumulatively completed and delivered 17 nuclear island main equipment sets, covering both the Hualong 1 and CAP series reactor projects that are advancing comprehensive batch construction, as well as major national engineering projects such as high-temperature gas-cooled reactors. In the coal-fired power generation field, the group continues to push into the coal power street reforms linkage market while maintaining the world's lowest coal consumption record for coal-fired units, thereby delivering coal savings and carbon reduction, deep peak shaving, thermoelectric decoupling, and efficient heating, and continuing to play a vital role in building a clean, low-carbon, safe, and efficient energy system. In the wind power field, the group's subsidiary, Shanghai Electric Wind Power Group, possesses domestically leading wind turbine design and manufacturing capabilities, has built China's largest offshore wind power sample database and delivered multiple benchmark offshore wind power projects. Through technological innovation, product diversification, and industrial chain integration, it has created an onshore product matrix covering 1.25 to 11 megawatts that can handle a wide range of complex terrains and achieve a substantial rise in wind power equipment orders in the first half of last year. In the energy storage field, the group is actively developing routes such as compressed air energy storage and flow battery energy storage, building a collaborative ecosystem across diversified storage technologies and offering multi-scenario storage solutions. In the elevator field, the group's subsidiary, Shanghai Mitsubishi Elevator, has released the LNK Intelligent Elevator Digital Solution 3.0, which iterates and upgrades both management efficiency and passenger experience around the themes of scenario empowerment and exclusive customization. In the industrial basic components field, the group's blade business has successfully expanded from traditional coal power steam turbines into aviation, aerospace, and gas turbine applications, upgrading from single energy blades to high-end products, including various aviation blades, key core products, and hot-end components, and has become a leading manufacturer of critical core components in the two engines sector. Its bearing business continues to grow across aerospace, high-speed rail, and urban rail transit, medical devices, industrial equipment, and automotive bearings. The group's bearing production base in Waigang Town, Jiading District, Shanghai, officially commenced operations in the first half of last year, center on the three pillars of intelligent manufacturing, smart logistics, and digital management. The base focuses on high-end areas urgently requiring domestic substitution, such as rail transit bearings, new energy vehicle high-speed bearings, and robot reducer bearings. In the aviation assembly manufacturing line field, the group leverages its extreme manufacturing capabilities and integrated equipment strengths to provide safe, controllable, and intelligent solutions for high-end uses in aircraft and aero engine manufacturing. In the intelligent transportation field, the group's TSTCB-TC 2.0 and TSTIOM products have successfully passed the China Urban Rail Transit Association's autonomous equipment evaluation and have been added to the association's latest list of recommended autonomous equipment. Recommended buy price is $4.8, target price $5.35, stop loss at $4.55. I do not hold the above stock.